Hey everyone, this is Sean Tennant, your local Tampa Bay realtor. I'm here with your Florida Real Estate Fact. Wanted to talk today about mortgages. I've had a number of questions about mortgages. It's a huge topic and it's one that we can't address all in one video. So I'm going to go over the basic sort of 5 or 6 types of mortgages that are out there, the main ones that you'll see. And then over the course of the next couple of weeks, I'm going to put out a number of other videos discussing specifics on each of the types and sort of pitfalls and things you need to look for when trying to get a mortgage. When you're buying a home, picking the right mortgage can save you thousands of dollars or it can cause you a huge amount of financial headache. So here's the main types of loans that you need to hear about. Also, just remember, I'm a real estate agent. I've been a mortgage broker in the past, but I'm not currently one. If you need to have specific questions answered about mortgages, I'll do my best to help you, but I also have partners in the mortgage industry that I'd be happy to direct you to. So first things first, conventional loans. These are your most common types of mortgages. They're not backed by the government. They usually require a credit score of 620 plus and 5 to 20% down. If you put down less than 20%, you'll pay PMI. That's private mortgage insurance. Watch for a video on PMI coming out in the next couple of days. One of the next most common is FHA loans. These are backed by the Federal Housing Administration. FHA loans are great for first-time buyers or anyone with lower credit. You usually can qualify with a score as low as 580. You need to put down as little as 3.5%. They do come with mortgage insurance for the life of the loan, though. VA loans. These are eligible for eligible veterans, for active duty military, and surviving spouses. There's no down payment, there's no PMI, and they have competitive rates. In the current rate environment, one interesting thing you know about them is VA loans are assumable. So if someone got a VA loan back when mortgage rates were as low as 2 or 3%, and they're selling their home now, you could possibly take over their loan and assume their mortgage with that low interest rate. It's something to look for. It's something that as a realtor, I can help you find. VA loans are one of the probably best benefits for people who have served. USDA loans. That's one of the ones that you'll see if you live in a rural area. USDA loans offer as low as 0% down. They offer low rates. You need to meet income limits and buy in an eligible location, but it's a great option if you qualify. Adjustable rate mortgages, or ARMs. These are mortgages that start with a low interest rate for a few years. Some are 5, 7, 10 years, and then they adjust annually after that. They can save you money in the short term, but they do carry risk if rates go up. So it's best if you plan to move or refinance soon. And you have to be careful. Back when the housing crisis of 2008 happened, people that planned to refinance weren't able to, and they were stuck with an adjustable rate that went up and caused them to lose their home because it was too expensive for them to maintain the mortgage payment. Fixed rate mortgages are your most stable option. Traditionally, you've got an interest rate and payment that stays the same for 15 or 30 years, and it gives you a chance to budget long term. There's a ton more to learn about mortgages, tons more for me to talk about. If you have specific questions, shoot them over to me. I'll answer them in a video, but there's a lot that I'm going to address on my own in the next couple of weeks. Keep watching, share this with your friends. I appreciate it. If you're still not sure what fits your situation, let me help you connect you with a lender, a mortgage broker, someone that I trust that can help you decide what's best for your goals. We'll get you on the path to homeownership. You can reach out anytime. This is Sean Tennant with your Florida Real Estate Facts. Thanks.